Welcome back. Let's get into this market picture now. And it certainly has been positive out in the Asian region in particular. We saw some positivity come through there. And that is despite the fact that US actually went negative yesterday. And one would have thought that that follows on because the United States has unfortunately not been able to agree to a stimulus effort thus far. US Republicans certainly struggling to put together that bill, which would be the second attempt then for them in terms of aiding that economy and trying to push it forward. Even the Federal Reserve not too sure whether they will get that recovery in the US economy soon, and indeed it may even take longer, unfortunately, for the US economy to get better. So the Asian market certainly would have taken that news into account, including the increased number of COVID-19 cases, but it's not to be at this point in time. It certainly was brushed off for a large part of the market trade. In fact, so much so that even the Hang Seng and the Shanghai Composite were a little bit higher today. The Shanghai Composite, even the biggest gainer there, more than 2% in the black. So some good numbers coming through for them there, with the Shanghai Composite at 3,294 points. A bit of a mixed bag though out in the European market. Only the CAC 40 seems to have risen confidently enough, 0.8% up there. But the DAX is down only marginally, that is, with the FTSE 100 up just over 0.1%. Onto the local market also, pretty much flat really, with a bit of a negative tinge then to this market picture. We do have the earnings news certainly coming to the fore in South Africa, so we are seeing a little bit of that. The likes of Sasol get interesting, the likes of Standard Bank as well, because the banking counters have seemingly gone higher, even though Standard Bank saying that they could see their earnings at least halve in this time because of COVID-19. So it does tell you the struggles that the banking sector will look for or certainly get impacted by, even though this is not a financial crisis. It is a health one, but it certainly is unfortunately affecting consumers quite heavily as well. So as I said, pretty much flat stance for the JSE All Share today. The biggest losers are those gold counters, unfortunately, 0.75% weaker thus far, pushing down the overall resources index as well. That's 0.25% weaker. Industrials pretty much following the JSE as well, with a pretty flat stance across the board on that front. Headed off onto the commodities board then. Well, Brent crude is just up 1.2% or so. So more questions around the demand concerns on this front. The higher that price goes means that you're hoping perhaps for more supply to come into the market, or perhaps demand not necessarily doing as much as you think it should at that point. Perhaps more demand means then that people would buy more of it. So you'd have to either raise supply or keep supply at its current level and just raise the price. But it seems to be headed off in that direction. $43.74 a barrel then for Brent crude. $9.44 though for platinum. These two have certainly had quite a bit of positivity of late, and of course even that gold price rushing off to that record high of $1,975 a fine ounce. Will it continue to head in that positive direction? Well, the trajectory is over the last 2 years that it certainly could. We are perhaps seeing a bump a little bit lower now as it perhaps eases before it goes for that final run. Maybe it is down 0.2% then for the gold price. Your currencies, slight bit of strength actually for the local currencies at 16.47 against the US dollar. We had seen it weaken over some time though, but the questions around that IMF loan are certainly interesting. The National Treasury indeed promising to keep a debt ceiling perhaps even as they go to Parliament, and perhaps ask them that, please, if we endure a debt ceiling, it would mean that we would cap how much more we can borrow as a country. That would work in tandem then with a spare ceiling rather than on spending, which would then mean that it is a promise you must keep. And the IMF would certainly keep a keen eye on that. So too with the ratings agencies and investors across the globe, who of course we are trying to woo into the country. 1932 though for a euro a pound, 21 rand. 36 cents. Makwe Masilela from Makwe Fund Managers joins us on the line as well then, as we get to unpack this market movement a little bit more. Makwe, a bit of a weird one here. The Dow Jones and the rest of the US market on Wall Street going down yesterday, but Asia seemed to pick itself up despite an increase in coronavirus cases. Not as much stimulus coming through from the US Senate Republicans, as well as the Fed saying they see this recovery taking longer rather than a shorter period of time. What's picking the market up?
Yeah, I think, picking it up and more of a mixed bag, because I think all eyes are on the Federal Reserve to today. We know they started the meeting yesterday. And I think it's a question of, as you said in our intro, for the fact that you are seeing the lawmakers in the U.S. failing to reach an agreement about renewing or extending the stimulus. And then I think now it's all back upon the Fed as well to do something. Yes, we've been expecting the Fed not to move, but at least we expect them to at least come out very strong to tell the lawmakers that, please, as much as we are doing something as the Fed, you guys have to play your part as well. And they will continue with that dovish tone going forward. So the markets are more relying on that. And in a way, we're expecting that those interest rates will continue to be low, for a foreseeable future. Even back home here, that's what we're expecting. So I think markets are more relying on that. And remember, also the big boys will be releasing some numbers as well. The likes of your Alphabet, the likes of Apple as well, Amazon. So I think the markets are looking forward to that at least they should get a boost from that. Because remember, those tech stocks account for almost 22% of the S&P.
Yeah, certainly does count for quite a bit. Just continuing with that earnings story, it is one of the busiest earnings weeks then in the United States, as you made note of there as well. Apple seems to still be the biggest smartphone manufacturer out in China. 32% increase then in the number of Apple iPhones then being shipped off to partners of Apple in China. So it clearly is still doing very well then as a company, that tech stock.
And definitely it will continue to do well, as much as we know that there is a rising tension when it comes to both countries, the US and China. But you know what? You cannot even have to hamper the likes of Apple, because this is more of a global player. And we think it will continue to do well, just like other, tech stocks. Likes of Amazon as well. They should be able to do well going forward. And the thing here is, I think markets will be more concerned about the new infection or the new wave, If we are not able to cap that, then I think we'll be in trouble. But so far, I think for the fact that we're making some serious strides when it comes to the vaccine, and I think governments as well are better prepared compared to the end of April, beginning of March. So this time around, we should be able to handle much better. So I don't think that health issue impact will be more severe compared to the first time when we started realizing that we've got a crisis named COVID-19.
On the local front, then CPI comes out 2.2% compared to the 2.1% we saw for the month of May. So June gets a slightly bigger figure, if you want to call it that. Surprised at all, perhaps, thinking that this would have gone even lower?
Not really, for the fact that we've seen that petrol prices have been going up, and it's all a question of petrol prices. Between May and June, we've seen almost a 7.5 increase. Yes, though for the year compared to last year, petrol prices are almost 20.9% cheaper compared to last year. But it's all a question or a play of what is happening with Brent crude or the transport component. Yes, we know it accounts for almost 5% of the CPI, but that's what's driving this whole CPI to continue to be volatile. And as we are expecting another petrol price increase, chances are we might see our CPI going up a little bit again. But you remember last week when the guys were making an interest rate decision, they expected the CPI to average 3.4%, and it's well below the 4.5, which is the midpoint. Because as long as inflation expectations are anchored around 4.5 or below that, then we are in a safe spot.
Certainly are a good spot then as well, and we'll see. Perhaps this gives them more impetus to even cut rates. We'll hopefully have to wait for perhaps another two prints to see on that front. Some company news then. Sasol has been plagued with a lot of trouble over the last number of years. Even losing those two CEOs has been because of that Lake Charles chemicals project out in the United States. Now they're deciding, well, we need to sell assets in order to make up some money as well here. A good or bad move?
A good move. The guys, they told us that they should be selling some assets in order to cut debt. We are talking debt of plus minus 122 billion rands, and we have seen the Lake Charles project, which has been the problem child. So far, they're also talking to get potential investors into that whole project, so that should at least lessen the burden when it comes to their balance sheet. And from the current sale that they're busy with, the guys are expecting to net at least 8.5 billion, so at least it should help to reduce their debt. Remember, we will be excited, and hence the market is happy with all this. Yes, Sasol also benefiting from oil price, which is up almost 1%, because as long as the guys are able to sell more assets, then it means chances of them having a rights issue, which might amount to almost 33 billion, might not happen, because the rights issue is the last resort. So every time we see them succeeding selling assets, the markets continue to be excited, and it explains the 10% increase today on Sasol price.
Being a meaner and leaner operation, I suppose, in many instances there. Marco, just very quickly and also very finely, Standard Bank coming out and saying that their earnings might even halve due to COVID-19. Are you surprised at all by that? Because, banks have continued to operate the same way despite COVID-19. The only issue has obviously been that consumers perhaps not willing to engage in things like taking out vehicle loans and big ticket items. But would that drop off earnings by 50%, you reckon?
Yeah, and you know what? We expected a number worse than that. And it's not only Standard Bank. We've seen even overseas JP Morgan this morning. We've seen even the likes of Barclays. And we expect the other banks as well. But listen, that 50% drop, at least we expected a number worse than that. It's not a question of them being operating or not operating. It's a question of their clients being able to repay whatever debt they have with them. So the question of impairments will continue to be there. And we don't know with this COVID-19 how long will it be with us. So that uncertainty will be there. So the reason we are happy and the share price is up, not just only from a better rent compared to the dollar, but also for the fact that the number we expected a number worse than that. So I think that the guys didn't do that.
Yeah, Makwe, appreciate the time. Thank you so much for chatting to us here on SABC News. Makwe Maselela is from Makwe Fund Managers, helping us unpack this market picture then as well. So